Good morning, December the 18th, 2015. Time to kick off another trading day. The biggest news out overnight was the Bank of Japan eased further. The world's economy, the ability to service the debt requires economic growth, and we're not seeing it. We're seeing growth contracting around the globe. The United States, through oppressive taxation and industrial policy, that gets worse every Friday afternoon when the bureaus dump their latest rules and regulations, is taking the United States growth, which historically has been over 3%, down to the 1.5–2% range. Europe is ecstatic when they've got growth north of 1%, and we're doing our best to become just like Europe and the other top-down controlled. China's economic growth officially is forecast in the 6.8% range for 2016, but most people think that China's actually in contraction. So the Fed's interest rate increase, the best scenario I heard for why they did it was, and this story's been out well over a year, is that everybody else has eased, has adopted quantitative easing, has low interest rates. The United States can raise interest rates a couple of times, and then if the world's economy hasn't come back or the markets start to falter, the Fed can cut interest rates and do QE4. So we will see how it plays out. What we do know is that Wednesday's announcement did not have dovish language. It projected 4 interest rate increases in the year 2016, taking the Fed funds rate to 1.6% by the end of 2016. So a lot of stuff in play. Japan eased further. That was a surprise move. Nobody expected it. The yen is up. The biggest stock market hit overnight was in Japan. The rest of the world's equity markets are lower. Yesterday, the E-mini tumbled into its close, hitting the 2025 area, which based on puts and based on open interest and calls, the 2025 close is part of the math. Looking at yesterday's option action, 60 and 80 calls were bought and 2,000 puts were bought. So that would make the close of the E-mini in the 30 to 40 range, say 35. So 25 to 35 is where, based on strictly option expiration, is where the math says the E-mini should close today. And we're at 2015 right now, so we're pretty close to that area. In the market, the E-mini would have to rally to get to those levels. My guess is, based on today's news, PMI service at 56.1, Forex is carrying it at 55 something. Pretty strong number. My guess is that one will come in lower than forecast. Atlanta, Fed, business inflation, don't know. Last month it was at 1.8. That would be pretty close to what our CPI shows year on year, 2% growth. And then KC Fed, last month it was at 1. That does not show robust growth. I don't know what the projections are today, but the market really isn't going to trade this news. To me, the market will trade the E-mini and down to option expiration dynamics. Okay, we are at resistance. You can see it right up here at 20. You can see this spill from 21. Obviously 16 is the market number. We've got a high right now of 17. So market is pointed higher and trying to trade higher. This 19 to 23 is sell 1. 27 to 31 is sell 2. I have raised that from what I wrote a few moments ago. On the buy side, I would like to buy the 9 area. We've got volume at 11.5, 12, so 8 to 12 will be buy 1. And then the buck to 04 for buy 2. So I've changed those numbers from what I have in print. Knob spread widened overnight given the selling in equities around the globe. The inverse relationship continues and probably will. If the E-mini gets slammed today, it was like we said last night when we left the markets. If the E-mini got slammed in the close, we wanted no part of the short side of the market. That is true today. Last rotate up a couple of days ago is at 56.29. We've got this high at 57.05. We've got rejection at 57.09. So resistance 24 to 28, 24 to the buck. I think we can go a little bit higher, so 27 to 31, then 7 to 11. On the buy side, last rotate down was 12. We're at 23. The breakout came from 17. So this is let's make it 9 to 13. Just kind of get around this high volume area for buy one. Might take a 17 to get in. But my aggressive buys on the bond, the market usually just blows right through them. Then 29 to 01 for buy two. Open it up at the next level. Gold held overnight, didn't break. And again, the problem, I don't see anybody buying gold as an investment. I see countries buying gold to protect their currencies or to give them an alternate. Well, we're going to reset and cut everybody's net worth 100 to 1, 10 to 1, and we're going to base our new currency on gold. If things get, you never know what's going to come out of that. I see individuals buying gold like they're buying guns out of fear. Nobody's got any confidence that the government can do anything they say they're going to do anymore. And we see it reflected every day. Gun-free zones. What's the first place a killer goes to look to shoot somebody? A gun-free zone. Why? Because he won't get shot back at. It's pretty simple. These people that kill, they plan, they do all that stuff. It's thought out, and their addresses are selected to give them the maximum impact with the least amount of personal risk. So gold got a seller against 60. Sell one. 64, 66, sell 2. On the buy side, 50 looks good. 49 to 51, buy 1. Then 44, 46, let them get stops below 45 for buy 2. I think the focus is going to be with the big traders and the opportunity. They'll see it as in the stock market, so might make for a quiet day in gold. Okay, I think China has devalued the yuan 9 days in a row. They did not do it overnight. But China's economic top-down control, most loans go to their cronies. Let's say about 30% of Chinese industry is, if not bust, pointed that way. And a lot of those are state-owned industries. They got their money, they got their loans, they got their companies through political favor. That's usually not the stuff of solid businessmen or solid companies. So here we are. We've got a sell one's going to be 90 to the buck, pretty much where it was last night. Sell two is going to be 25. On the buy side, 25 to 35. And then 108 even for buy two. Dollar took it in the shorts last night because of Japan's move, and but we see that every other day the dollar's up or down and the currencies are. It's guys know how to work a trading range, and they're privy to inside central bank information, and I'm not saying they mint money, but pretty close to it. And their only exposure is when they move out of the trading range, and that's why there's no liquidity. They just shut their doors. Nobody trades. The market stabilizes, they jump back in and start trading again. And the riskiest investment out there continues to be currencies. What Japan did, the Bank of Japan did last night. The Bank of China, the European Central Bank, Bank of England, the Fed, they can all do it. And they usually time it or do it to inflict the most damage they can on the trading community. So you can get your head handed to you. Countries, currencies, banks fail overnight. Whereas it might take 2 years to run crude oil into the ground. And you can see it happening on a daily basis and take proper steps. Okay, we are pointed lower. I think we can go a little bit lower on crude oil. Wouldn't be surprised if we got down for stops below 35, but first support's going to be 50 to 75. Second's going to be 20, 35 even to 25 for buy 2. On the sell side, 36.25, 36.50, sell 1. 36.75, 37, sell 2. Buy side's a little higher than it was last night. And down to the E-mini. I think the major dynamic, like I've said today, is option expiration, and fundamentals usually don't come into play. And there really is no fundamental news outside of the Bank of Japan's easing. Okay, mathematically, puts 1950, 2000. There's a lot of action, both calls and puts at 2050. And right in the middle. And then 2100 is where the next call is. So if you just look at it on a big basis on expiration, 2100 and 2000 is where it is, which would favor a close at 50. Mathematically does not mean it'll happen, but there's a lot of incentive to close the market at 50. Yesterday's option had 60 and 80 calls bought, with the 80 calls did more volume than the 60s. And there was some action at 2050 for both of them, and then we were to 2000 on the puts. So that would give us a close in the 30 to 40 range. So 2025, 2035, based on the 50s and where we were yesterday, looks like it might be where the market closes today. And so that's the number that we'll watch. If we stay below 25, we can trade lower. Right now we're at 15. Last rotate up stopped at looks like 18. Then at 21, and at 23. So 18 to 23 is where resistance is. Like to sell 19s or better, but we'll make it 18 to 23, sell 1, and then 27 to 30, sell 2. On the buy side, 9 to 11 is buy 1, and then we'll make 2000, 2005 buy 2. Best structural support is at 2000 on the buy side, and then 20, 27, 20, 31 to start out. So we'll play it. I thought there was one short left in the market. Hopefully we'll be able to pull that off in the 2020 area, close to it. See if we can take out 2010. If we can't take out 2010, we can trade from the long side. And it's going to take a bit to get everything up and posted. I'll get busy on that. I'll be back with you as soon as possible.